Hello and welcome to Neko Nation Japan. My name is Jeremy, and today we're going to do something a little bit out of the ordinary from my usual stick. I'm going to talk about a lot of my dividend investments. So I have a rather decently sized dividend portfolio inside of a Roth IRA account. This Roth IRA account was funded from the money that I was put into my normal IRA through working about 6 to 7 years in a company into the 401k actually from my work. And then I put it into a rollover IRA inside of Fidelity. As you can see here, I had a pretty sizable amount of money, like over that six and a half years, something like that. I had up to $28,542. And that's pretty good over that amount of time, considering I only had a salary of about $30,000. I started out in 2016. I transferred by that time the total amount of money Fidelity Investments. I really like Fidelity. They have relatively low cost, and it still allows me to trade while I'm here in Japan. A percentage of this, I went from a rollover IRA, which is taxed when you distribute once upon retirement, and then I transferred that year. I transferred 15,000 of it over this time into a Roth IRA. Now, this conversion from the rollover IRA to a Roth IRA is then I get taxed on it, but I had a few things going for me. Being outside of the country, I had absolutely no income in the States. So you basically get money out of your paycheck, you didn't pay tax on it, put it into the IRA. Then you roll it over to a Roth IRA, which is not taxed when you take the money out. I found this is a really interesting and effective approach to try to avoid tax. Starting amount to this account was this $28,542. Now it has been growing slowly but pretty steadily. Now I would like to say a lot of that is because of the dividends it's incurring that I'll show you here in a little bit, but unfortunately a lot of it is just gains. I would like to get more and more dividends. It's been recently I took it very, very slow and just accumulating those dividends slowly. I just put in 1,000 in each particular company I was interested in, and just kind of getting a little bit more wherever I felt comfortable in investing, and that's where I had to start out. So, alright, let's get right into the specifics of my account. I have a total of 14 stocks. I have a total of 32,000 some odd invested. Originally, obviously, I only started with 28,000, so it's went up a few over the years, but that's specifically with no contributions to the account. It's mostly been the gains on, like, Apple has gained 1,300, and a pretty good gain on Microsoft. That's up 121% since I bought that stock. Amazing growth on that, but that's not the reason whatsoever I bought these particular stocks in the stock market. All of this is specific to I want to gain dividends and grow the dividend investments. And so I chose Apple. That seemed like a pretty good play. I have Apple and Microsoft, the two biggest in the computer tech space. Now they both pay decent dividends. I want to increase the particular shares on all of these companies. I went through my list here. I have 14 companies of how much stock. So I need 267 shares of Apple in order for Apple to pay me enough money so I can get basically $210 every quarter, allow me to buy another share of the Apple's price, the Apple stock, no matter how much it is. Based off the dividend they pay and their current dividend growth rate. I would like to get it, but that's going to cost me, $50,000 in order to buy enough shares, the 267 shares, in order to give me that much. It's a future goal, and I'm slowly working my way. But until that point, every time I get paid a dividend from each one of these 14 companies is automatically reinvested in that company directly. What do we have here? We have Apple, a very good company. Always just about everybody knows Apple computers, the Apple phones, all that. Right now they have a cost of $209. I originally bought it at $144. I wish I bought some more shares of it at that price, but hindsight's 2020. Right now I have 21.45 shares. 0.445. Excuse me. I want to get that up, and every month I'm slowly gaining more and more shares. All right. So I have Apple. I have Corvidia. I don't know. It's a new company that got merged with the two largest chemical companies in the world. So I originally owned just Dow Chemical, and I had 15 shares, and they gave me 5 shares of each company. Then I looked at each company individually, and I saw what they were doing, and I took kind of a leap because they were definitely down on their prices for each one of the shares, and it's kind of lower here. It's coming back a little bit lately, but not really. We're going to see what happens as far as that goes. Then we have DuPont, Nemours, great chemical company, Dow Chemical Company. I'm going to go into each one of these particular stocks I've chosen in a little bit more detail, but I'm just going to general overview. So I have Johnson & Johnson, a great dividend paying company. Been doing that for years. 10 shares of that. So my original goal was to get just $1,000 of each stock to see how they performed, to see what it was doing, to see if they're moving up, if they're moving down. I liked all this stocks, and I bought more whenever that particular stock, if it dipped a little bit, I'd buy a few more shares. And then I have Coca-Cola, which I bought 55 shares of it, and hopefully that goes up more. It will, and once it pays the dividend. And I'm looking forward to seeing exactly how many shares I get from that. Or it's not going to be a full share. Even with Coca-Cola, I need 138 shares to get myself 1 share every quarter. Now I'm a little bit limited with Roth because you can't get it in this account, and I'm not in the States, so I don't have a job in the States where I could put that money into a self-directed IRA and then roll it over to this Roth IRA. So I'm a little bit limited in the amount of funds I can put it in there per year. So my general overview of this account over the last 2 years. So I started in 2016 just transferring over the funds, and then I started investing in particular stocks in 2017 and transferred the last 13,000 of it. So making a total of 28,000 in this Roth account. Starting investing it. It went down for a while, then got ups and downs, and it's definitely doing the cyclic thing. But in particularly here, I started buying. Some of the stocks went down in price, so I started buying them, and then the particular dividend. And so once they get back into growth, so I was buying, I believe, in 2019 early, and it just started going up from there. We'll see. I'm at 32K right now, and see exactly how much that is. So let's hop over. We're going to go to the Fidelity website. I'm going to show exactly how I set it to reinvest all of my dividends. Now we're over here in my Fidelity account. I have a rollover IRA in my Roth account here, and you see there's no more money left in there. It's all in here. So we have $32,869 currently. It just went up a little bit. So how do you set it? First things first. After you buy any particular stock, I want you to go over to account features. Come on. There we go. And we're going to see here reinvest dividends, brokerage, and trading. So we're going to click on that, dividends and capital gains. Then we look down here, and you want to see, none of this is just my core, the IRA rollover one. There's nothing in there, so there's nothing eligible for positions. So I have AT&T, Apple, all of my stocks I've invested in right here. Then I have actions, so I could have dividends, I could have repaid right into the account, I could have automatically reinvest in security for free, which at the particular time I started this account there wasn't any free ways to invest in dividend stocks or anything like that. So I do pay the $4.99 whenever I pay or buy the shares. But once I buy it, I automatically have it reinvest every quarter. So you come over here to update, and you would say reinvest in security or deposit in core account. So I reinvest in security, and then I just, every time, all equity position account and future equity purchase transferred and deposited into the account. So I just update it, and then I come back and it says confirmation, yay, and I have to change that, but all right. Then we look at, the only one I'm really cared about is my dividends. See how much dividends that I get. So I announced dividends and it was paid on this. So the next one is going to be that, and paid on that. So dividend pay date. And then we have our yield, the payout ratio, which is very important. Make sure you don't want a too high payout ratio, because that could be very bad for the future stability of your dividend. They're either going to have to reduce it, cut it, or take out debt in order to cover it. All those particular situations are just bad. Lately, I've been looking at this Seeking Alpha. I saw it from another investor, so you can do your day watch. Today, we're just going to look at Apple. So we have the price right now, 213. Percentage change for the day, average volume open to 212. This is your typical. So last was a 52-week range, it was 142. So that's about where I bought it last time. It was low like that, and I hope it will get there again, and I'll buy some more shares whenever I can. But what's really important to me is we head over to the dividends. So we check Apple. Last time they paid. So how much, the rate, so it's 308, the yield, percentage, payout ratio, and 3-year dividend change rate, and the 5-year change rate. So we just quickly at a glance see exactly how much they've been paying, just what the rate is, make sure there's no. So my current payout rate on these particular, because they're just basically reforming the company, so all of these numbers are all skewed all over the place. Some of them have really high payout ratios, and some of them have negative payout ratios. So I'm not really worried about that. It is kind of a little speculative thing. They are a really big company and they still pay dividends. So I'm just going to leave what I have in these three, and hopefully it turns out for the best, obviously. And hopefully they maintain that dividend and grow in the future. I always try to keep 60 and below. Coca-Cola is just a huge company, and I am fully accepting of that, depending on the core values of that particular company. We have XCOM right down here is 90%. I don't think that's a problem. There are a lot of infrastructure, and that it's oil. So what are you going to do? We get right into looking at Apple. See what kind of company Apple is for dividends. So we have a current price of the 213. The 52-week high is at 233 with a 52-week low at say 142. Earnings per share forward, that's pretty good earnings per share. And we have price per earnings, it's a little high PE ratio, but you know, it's Apple, it's a huge company, and we're looking specifically at what they want for dividends. So this is the price, and not too bad there, but this is where the real our dividend scorecard, if you will. So current dividend yield 1.4, annual payout forward $3, and the payout ratio, really nice payout, is 26%. That's good. 5-year growth rate of 10%, and dividend growth the last 7 years, and that's not too bad. And it's quarterly. This was the last one I got. So based on that, I said, oh, okay, that's pretty good, right? So we look at our dividend history. Another thing we want to look at. So we're going to look right here at dividend history for all time. And we see that a nice, just up slowly. And they have, based on their scorecard here, their payout ratio is super low. So I really want to buy more and more of this particular Apple, because, well, it's Apple doing pretty good. in order to get that dividend up and up and up. So every month I get more shares and more shares and more shares, until eventually I hit to the point where I don't really need any more shares of that particular company. So I can just say, okay, I just want the money from it. So I go back in. I'm going to try to do this video every week, and I'm going to go through. So I did all of 2016 for this video. Now I want to do 2017 and the particular purchases. My name is Jeremy, and you've been listening to me rant and rave about dividend investing in Neko Nation Japan. If you have any questions, please leave comments below. Like and subscribe and notification bell if you want to hear from me again. All right, thank you very much, and goodbye.